We got some great news for NIO stock investors this week as the company's stock price has absolutely surged. In this video, I'm going to talk in more detail about why the stock price is surging and what it could mean for NIO stock investors for not just the current quarter, but the upcoming quarter and over the next several quarters. So let's take a look at the latest developments at NIO.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Right, so NIO shares have been soaring this week as China has a plan for accelerating growth, and the electric vehicle maker could be one big beneficiary. But even before China's economic stimulus making an impact, there was signs that NIO's business was getting in better shape, and I highlighted those issues in the previous video I made about NIO in how the company's deliveries were improving, the profit margins were improving, which I'll talk a little bit more about a little later in the video. First, I wanted to discuss the stimulus, China's stimulus plan, a big stimulus plan helping consumers in that region have more spending power by lowering some of their mortgage payments and other measures the government is taking to get consumers in that region spending money again. They've been saving a lot more in that region, and that's been hurtful to the economy. The property sector's woes have extended into other categories, and that's hurt sales everywhere else. Now, the big thing, the big connection for NIO is that NIO and all car companies for that matter are very, very correlated to economic growth. When economic growth is really strong, car sales are really strong, and the opposite is true. And the reason is very intuitive. If you have a job, then you want to have a car because you need a car to get to work. But if you don't have a job or you don't expect to have a job, then you're probably not going to go out looking for a new car. And so that's why when the economy is growing, you see car sales surging because more and more people are getting employed or getting better jobs and they're upgrading their cars. And the opposite is also true. When you get laid off, you're not going to be thinking about buying a new car. Or if you're at a company and you notice the company's doing layoffs and you might not be getting laid off, but you see your friends and coworkers getting laid off, then you're going to be more hesitant to go out and look for a new car. Car sales are one of the most economically sensitive industries overall. And so that's why you're seeing this outsized response from NIO stock to the economic stimulus, because it's going to have an outsized response. If the economy grows at 1%, car sales will grow at a larger percent. It's always more sensitive than the actual growth of the economy because it's one of the first things you could look for when you get hired. You want to make sure you can get to work. And so that's why this has been great news for NIO and NIO stock investors. But maybe it wouldn't have had such a positive impact if NIO wasn't already heading in the right direction. In its latest quarterly update on September 5th, NIO said that vehicle deliveries came in at 57,000 for the second quarter of 2024, and that was an increase of 144% from the same quarter last year. So it was already growing over 100% year over year. And then on top of that, now you have this backdrop of economic stimulus that's going to make the third quarter better than expected, but more so the fourth quarter. That's when it's going to result in much better than expected results for NIO. And then the thing I liked about NIO in its latest quarters was not just the 144% year over year growth, but the improvement in vehicle margins. Vehicle margin came in at 12.2% in the second quarter of 2024. That compared with 6.2% in the second quarter of 2023. So vehicle margins almost doubled year over year. That was more impressive because up until that point, NIO had trouble with the bottom line profitability. Growth was excellent for this company. Where it had difficulty was in improving margins because it was spending so much to facilitate that growth. But in the latest quarter, it demonstrated that at its scale, when it gets larger and delivers more units, it can be more profitable. And then They've also recently introduced the lower priced Onvo brand, which is coming out to very popular response. And so all of that is working for NIO's favor. And you can see here in the 1-year price chart for NIO stock, in recent weeks, NIO has rebounded after it hit a low of below $4 a share. It's bounced up by over 50% to $6.55. It's up past some resistance levels from this year and approaching levels not hit since 2023. So this has certainly been welcome news for NIO stock investors. Interestingly, NIO had forecasted deliveries of 62,000 units at the midpoint in the third quarter. I wouldn't be surprised if the company delivers better than expected results. Maybe not by much, because most of that quarter has already been completed. Most of the third quarter had already been completed before the economic stimulus came into effect. But you can see the tail end of the quarter might be positive, might be more positive than expected. But what I'm expecting is the fourth quarter, the next one, not the one that it's about to report on, but the fourth quarter is where NIO's prospects are going to be much better. I would be looking for a deliveries closer to 75,000 units perhaps for NIO in the fourth quarter. I wouldn't be surprised if it was even higher than that. So NIO stock investors, finally, after being so patient with this company, with the billions of dollars of losses on the bottom line for several years, I'm happy to see that the stock price is rebounding and NIO stock investors are getting some relief and some reward for all of their patience for sticking with the company for this entire time. So finally, the Chinese government doing something to prop up the economy. The Chinese economy has underperformed significantly in 2024. I was expecting a much better rebound in the Chinese economy this year, but it's been disappointing and it's been a little bit difficult for investors in Chinese stocks. I've had some of the Chinese stocks rated as one of my top stocks to buy. Alibaba, for instance, I have rated as one of my top stocks to buy. It's underperformed my expectations in 2024, partly because of the lower than expected growth in the Chinese economy. So this is good news to hear for many of the consumers in that region and for investors of stocks in that region. Hey everyone, I'm excited to announce that my book, Make Money Buying and Selling Stocks, a 6-step framework for evaluating publicly traded companies, is finally available for sale. Unlock the power of intelligent investing with my 6-step investing framework. It's a proven system designed by a university professor and a chartered financial analyst. Frustrated by the lack of frameworks that met my needs and high standards, I developed this comprehensive guide to help investors at all levels make confident and informed decisions. In this book, you learn how to assess opportunities, manage risk, and build a portfolio that works for you. No investor should dive into the market without a solid strategy, and this step-by-step framework provides you the roadmap you need. Whether you're just starting out or looking to refine your approach, this guide will empower you to take control of your financial future. I've added the link in the description below.